Preparing live on Facebook. Hello, this says I'm live on Facebook, so we're now streaming and I'm waiting for some information to load itself here. One of the things that I wanted to do is to set up my phone for comments, and I'm kind of hoping that someone will come on and comment. I want to make a comment myself. Let's make sure that it's working. So let's see. I swing this over to here. Bear with me, guys, and we're getting this all set up here momentarily. All right. Happy Saturday to you, Barb. Now, let me say hi on here. Just give me a quick second. We're almost there. It is Saturday, May 8th. And welcome, everybody, to Weekly Tax Talk. We are sorry we missed you last week. I am sorry. It's tax season, and I can't tell you how thrilled I am that there's only 9 days left. So that's great news for us. It's great news for you if you haven't filed your taxes yet, because that means you still have 9 days. So let's get on that, shall we? Let's see. Sorry, I guess I'm not as ready as I could have been here. Okay, so Facebook. Hello. This is I am. There's only 9 as ready as I could have been here. Okay, so Facebook. This isn't. Hello. Comments for us. All right, so write a comment. Hello. This is supposed to work. Let's see if this actually does. Okay, I should be able to see comments now. So let's proceed. Thank you for your patience. I know, isn't this fun? The topic for the week. Owing tax and accounting is heading in a whole new direction, and I want to make sure that people have an opportunity to ask questions about that if you have them. Now, I've put this event out there for a couple, 3 days, and the big direction change is this, and I know this is kind of odd, and it's a thing that we spend a lot of time thinking about, talking about, agonizing over, deciding whether or not we're crazy or not, and here's what we decided to do. You think of a CPA, a accounting office, enrolled agent, whatever, and you think tax returns. I need to find somebody to do this for me because we open a new business, or we have all these stocks and bond sales, and it's just going to be a little crazy this year. We need somebody to do our tax return for us, and so people tend to think of us as folks that do tax preparation, and this is true. So tax prep is a key and integral part of the business, certainly, and doing a good, clean tax return is very important to the lifeblood of a business as well as an individual household. And so it's going to come as a little bit odd to some people that have not been following the social media that we are not going to be doing tax returns for once a year clients anymore. Somebody that comes in and says, okay, I got all my stuff scooped up here. What do I need to do a tax return? How much do you charge? And the answer, as of April 29th, which was, let's see, 11 days ago, is we are no longer working that way. What we'd like to offer you instead is a year-round program where we're able to basically provide stewardship of your entire tax situation for the entire year. We're basically focused on small businesses anyway. We haven't really done any individual, meaning W-2 type tax returns since February. And we've been focused on small businesses, specifically realtors, but some other businesses as well. And we don't turn people away that aren't a real estate agent. It just happens to be who we resonate with and who most of our clients are, over half at least anyway. So, but what this means is that we have been a small business tax and accounting firm providing what I like to think of as wealth partnership. You're good at bringing in the gross revenue, what I call the top line. And the thing of it is, though, is there's a big difference between what you make and what you keep. The what you keep part can be thought of as what you make. However, and this is the big however, it's not what you pay tax on. It's also not what you get to spend. So I read I'm kind of reading something all the time, but this one guy popped up and he said, if you use the phrase, I can afford this, you can't. You ever heard that thought before? What that basically means is that if you have to justify for yourself, there's somebody at my door, let's ignore that. So kind of hoping, actually I need to see what it is. Hang on a second, just stay right there. I'm gonna leave the screen on. Matter of fact, we'll just go ahead and keep talking to you. And oh, good. Okay, it's getting answered. This is a little fun thing, but I bought my wife flowers, and guy, of course, he shows up during the live broadcast. So I'm going to have a happy wife when I get done here. So we're going to keep this short today. We're talking basically about the paradigm shift of Owings Tax and Accounting. And that shift is simply this. We're very happy to be your tax and accounting specialists. If you come to us with a tax return, we're going to offer you an opportunity to work with us all year. Now, why do you need a year-round tax accountant if you just need a tax return done? Let me tell you, I get so many returns where somebody comes to us and they say, okay, here's my revenues, here's my expenses. Please do your magic, turn this into a return for us. And I get to the end and they owe something like $5,000, $6,000, $8,000, $10,000. And then they owe even more money on a box next to the amount you owe box. At the very bottom of the return, above the signature, there's a box for underpayment penalty, and there's a number in there too. And the reason is you're not paying as you go. And believe it or not, if you're not familiar with this concept, you're not watching the weekly tax talks until this week. The Internal Revenue Service is a pay-as-you-go system. What was your first job? Did you work at Mickey D's or some other food outlet while you were still in high school? You got something called a paycheck, and that paycheck generated something called a W-2, which is a once-a-year event, and you get that at the end of January-ish. And what that shows is your gross wages that you made, the federal income tax withheld, if you're in one of the state income tax states, and 43 of them are, I think, 2 of which are, okay, anyway, let me not get off on that tangent. So you get a W-2, and there's 6 boxes: your gross wages, federal withholding. Box 3, Social Security wages. Box 4, Social Security. Box 5, Medicare wages. Box 6, Medicare taxes. Okay, now the Social Security and the Medicare are based on a straight percentage, with some rare exceptions. For example, school teachers paying the para, they have a different amount. Other people do too. But for the most part, your Social Security is going to be 6.2% of box 3, and your Medicare is 1.45% of box 5. And the federal withholding is whatever was calculated off of a table based on the W-4 that you gave those guys when you first got hired. All this stuff is federal law. But what it means is if you work for somebody, your taxes are taken care of by your HR. It's taken out. They file something called Form 941 every quarter. The federal government gets their money from both the Social Security and Medicare programs, as well as your federal withholding. You file your tax the following year. Hopefully you've hit the bullseye and you either owe less than or are getting a refund of less than $1,000. For me, that's as close to a perfect tax return as you can get. Now, I know there's people out there going, oh, I don't ever want to owe. It's like, that's fine. Yeah, you can over withhold a little bit, but don't over withhold $4,000, $5,000, $6,000. Uncle Sugar makes a bad piggy bank. They're spending your money, you're losing your spending power. Don't do it, okay? If you need help, you know how to get a hold of me. Just don't do it, okay? If you're withholding $6,000 a year, getting that kind of a refund, that means you lost $500 of your spending power every single month of the previous year. $500, you can do a lot with that, right? Right. So my point is this. If you have a job, the IRS is a pay-as-you-go system, and you don't have to think about it. Now, for my small business entrepreneurs out there, the people who I'm now serving year-round exclusively, as opposed to once a year, pay-as-you-go occurs 4 times a year. Sounds easy, but I have so many experiences of people that just don't do it, don't bother doing it. Nobody's telling them they have to do it. So you don't make your payments. I'll say these dates again and again, but they are April 15th, June 15th, September 15th, January 15th of the following year. Those are your 4 withholdings, and they're called estimated tax deadlines. And you need to cough up some money during each of those, assuming that you're making net income. If you're going to owe more than $1,000 in tax in the following year, you have to make estimated payments. Now, who's telling you have to do it? Nobody. What happens if you don't? You get punished. You're charged extra money by your government. So that is what the idea behind year-round services is. We want to be there for you all year so that you are making those payments diligently. So you have an idea what your tax situation is at least 4 times a year. Well, let's say 5 or even 6 times, because the other 2 would be when you do, if you have a business filing like an S corporate partnership, and of course your 1040. The other 4 times are going to be those estimated tax deadlines. At the very minimum, you should be at least paying attention to those. And that is the idea behind year-round services. So with that, does anybody have any questions about that? Owings tax and accounting, I want the takeaway to be that as of April 29th, right now, in the middle of tax season, we are no longer accepting any one and done tax returns. If you need a tax return done, we are very happy to talk to you about what that looks like year round. And what we mean by year round is we do a calculation of administrative time, those estimated payment advisories, as well as the tax returns, add the whole thing into one number, divide it by 12, and charge you an exact even amount every single month. So the pain is less. You don't miss it as much because you're basically paying over time. So that's the way that we're doing business now, and we're hopeful that it's something that resonates with you. There are so many people that do things under subscription services that it's pretty commonplace. And in fact, once you make your first payment, you begin working with us, we'll actually make all your additional auto debits for you automatically. You don't have to think about them. You just get an invoice and an email that reminds you, oh yeah, Eric's still out there billing me. So, but it's much less than it would be near the end of tax season. And by working with me all year, your tax liability will be too. So that's the big change we're making. If you need one and done, apologize. We're not going to be able to help you, but we would love to talk to you about what year-round services look like. So that is my topic of discussion for today. Does anybody have any questions about that? Anybody at all? If I don't see a comment pop up in this string, I'm going to give you like a full 60 seconds and I'll yammer about something here. But if not, I'm going to hop up and go look at my wife's tulips because I want to see what they look like. So, you know, who's that guy? Ben Stein from Ferris Bueller's Day Off. Anyone? Anyone? Remember that movie? Okay. All right, you guys. We're coming down to the point where I'm going to go ahead and say so long for this week. A couple last thoughts to leave you with. The big one is May 17th is the tax filing deadline. The only reason it's not the 15th is the 15th is a Saturday, 1 week from today. But they never do deadlines on a weekend. So that gives you 2 extra actual calendar days. 11:59 p.m., your tax return needs to be e-filed or postmarked, or your extension has to be one of those 2 things. So, and if you are filing for an extension because you just don't have it together quite yet, even with the extra month, what were you thinking? No, I'm just teasing you. But seriously, if you do need more time, extensions are great, and it will be until October 15th, the normal time, not 6 months, because October 15th is always the extension deadline. So if you do that, just remember that it's an extension to file your return. They still expect you to pay by May 17th. You do get the 1 month holiday for making the payments, but interest and penalties begin accruing as of May 18th. So if you are going to make an extension and you do believe you're going to owe money, pay it with the extension. And that's easy enough to do. You can actually write that on the, I think it's form 4868 if you want to do it in paper. If you'd like to work with me year round, I can e-file an extension for you. And that'll be one of the first things we do because it's coming quick. All right, guys, it's been fun talking to you and really enjoying the new paradigm shift of the company because I think it's going to be a great thing. The big takeaway from this is the very fact that these small engagements where somebody works with us, we're basically communicating back and forth to get a return done. We found that takes time away from the people that are willing to work with us all year long. And so for those of you, and I've got 17 recurring clients actually right now, and we are so grateful to each and every one of you. We're paying more attention to you now. So if you'd like to join a roster of recurring clients, anywhere, if you're watching this on Facebook, obviously, go up to my cover photo. It's a picture of Pikes Peak and it says, click the schedule. Get up there, send us a direct message and find it and schedule time with us and let's talk about what it takes to work with us year round. We promise it'll be a lot of fun and you will save thousands of dollars every year. Let's talk about how I do that too sometime, okay? We're really looking forward to that. And spring is springing, Memorial Day in a couple of weeks. Just remember the tax filing deadline is 9 days. 9 days, okay? Don't forget, we will see you next Saturday with 2 days to go. So until next Saturday, the 15th of May, have an awesome day and we will see you soon. So long for now.